Hello and greetings from UB. On behalf of the Office of Alumni Engagement and the UB School of Management, we are delighted you are able to join us for today's webinar presentation. My name is Christy Fields and I'm the Director of Alumni Lifelong Engagement here at UB. I am so grateful you are able to join us today, and I hope you and your family are staying well. It is my honor to welcome today's featured presenter, Dr. Joshua Kavis, Assistant Professor of Accounting and Law at the University of Buffalo School of Management. Josh teaches data analytics in the Masters of Accounting program, as well as financial accounting. He received his PhD in accounting from Temple University in 2019. His research interests include financial accounting, auditing, and answering elusive accounting questions with big data. In today's session, you will learn about how accounting employees perceive many different aspects of their workplace, including compensation, career opportunities, and work-life balance. Which aspects of the workplace best explain employee satisfaction, and how employee satisfaction and work-life balance are linked with the quality of audits performed by accounting firms. We will leave some time during today's webinar for Q&A. If at any time you have any questions during the presentation, go ahead and submit them through your GoToWebinar taskbar question section. You're going to see that on your screen, and you can chat those to us at any time. In addition, we'll be recording today's session, and we will send you all a copy within the next 24 hours. So with that said, it's my pleasure to turn it over to our featured presenter, Dr. Joshua Kavis, Assistant Professor of Accounting and Law at the University of Buffalo School of Management. Welcome, Josh.
Thank you, Christy, and thank you all for attending this webinar on employee satisfaction and work-life balance in accounting firms, and as well as the determinants and consequences, which we'll be discussing today. So in today's webinar, as Christy mentioned, we'll be looking within the public accounting firm to understand the working conditions that the accounting employees face on a day-to-day basis, and also understand the role that these working conditions have in producing quality audits. Now, to be clear, there are different kinds of audits out there. So we're all familiar with, well, the federal tax authorities, right? The IRS, the dreaded IRS. There are also state and local tax authorities that may conduct audits to make sure that individuals as well as corporations are paying their taxes on time and also are in compliance with all the relevant tax rules and tax regulations at the time. But that's not what we'll be talking about. The focus of this presentation when it comes to audits will be on auditing accounting and auditing public firms. So we'll be focusing on the public accounting firms, the accounting firms that audit the financial statements which are prepared by public firms, firms that have stock traded on the various stock exchanges and that raise funds through the capital markets by issuing stock. So these auditors ensure that the numbers that are being reported by these public firms are reliable and trustworthy. And as such, these auditors provide an important service that helps maintain investors' trust in the capital markets. So in the presentation, we'll dive into the accounting industry by focusing on three main questions. First, we'll talk about, well, what are accounting employees thinking? What are they saying about their employer? Are they happy? What do they value? What are they unhappy about at the workplace? And then we'll move on and talk a little bit about what determines the satisfaction, what explains satisfaction of these employees at accounting firms most, as well as what explains it the least. And finally, we'll talk a little bit about how employee satisfaction and work-life balance of these employees explains audit quality, whether there's a link and what sort of a link do we see based on data. Now, before we zero in on these questions, I want to first provide some background. So we'll discuss the makeup of the public accounting industry, the role of the auditor, and some past and recent events as well as regulations that have changed how auditors operate in our day and age. So many of the findings I'll be discussing today are based on a study that I co-authored with Professor Krishnan of Temple University. The study contains all the detailed statistical tables and findings. So if you're interested in all the statistics, you're free to look up the study. The study is published in AJPT, which is an American Accounting Association journal devoted specifically to audit topics. Now, a summary article related to the findings has also been published in the Current Issues in Auditing journal to make the results a little bit more accessible to a wider audience. And the summary article discusses the practical implications of the findings related to audit quality, employee recruitment, as well as employee retention, and may be of interest to different stakeholders, such as accounting firms, accounting practitioners, as well as public firms. So if you are interested in accessing any of these articles, please let me know, and I'd be happy to share them with you if for some reason you cannot access them on your own. Okay, so first, let me talk a little bit about the public accounting industry. So here we have just some of the household names, some of the common names of the large public accounting firms in the US. Now, the top 4 firms, which pretty much control the market, they have the largest market share and provide the bulk of the audit services within the US, are the 4 firms right here. They're known as the Big Four. We have PricewaterhouseCoopers, Ernst & Young's, KPMG, Deloitte. And these accounting firms, typically they provide 3 types of services: audit, tax, and consulting. And our focus today will be specifically on the audit line of services that are being provided by these firms. So why should we care about accounting firms in general and auditing in particular? And what is the role of auditing and why is it important to capital markets? Right, so those are the questions that we have to get out of the way before we really dive into answering the 3 questions we mentioned earlier. And before we could begin to answer these questions, first we need to know, what does the word audit even mean and where does it come from? Well, if you think about words such as audio and auditorium, so audit is actually related to those words. It stems from Latin, from the Latin word that means to hear. Now you may ask yourself, what does hearing have to do with auditing? How are these related? Well, during medieval times, believe it or not, when manual bookkeeping was prevalent, auditors in Britain used to literally hear the accounts read out to them. And this is how they checked the organization's personnel were not negligent or fraudulent. So they're actually hearing the accounts. Now, early auditing in the United States was viewed mainly as a verification service, where the auditors were seen, their main role was seen to be verifying the bookkeeping detail. And so their main job was simply to verify the accounting numbers that were reported and to make sure that they were correct and followed all the accounting rules. Now, another important duty of the auditor is to detect fraud. So when it comes to capital markets, the auditor has a very specific role. The Securities and Exchange Commission requires that all public companies conduct regular reviews by external auditors, and that these reviews must be in compliance with the official auditing procedures. So within the capital market setting, the main duty of an external auditor is to make sure that the public company's financial statements are following the generally accepted accounting principles known as GAAP. And so the auditor helps instill investors' trust in the financial numbers that are being reported by the publicly traded firms to the public, to the investors. And so this trust is what ensures that the capital markets are indeed operating smoothly. So trust is clearly very important. But in the early 2000s, we saw a number of financial scandals which really shook investors' trust in the capital markets and in auditors. We have seen the collapse of Enron, of WorldCom, of Tyco, and in the early years of this century, it really turned bookkeeping into front page news. Investors lost well over $200 billion in those scandals. Just to give you a sense of how large the scandals were and their effects. So in 2002 alone, the stock market lost over 1/5 of its value just between the months of April and July. And more importantly, the large scandals resulted in investors losing trust in the financial markets. and they started casting doubt on the accounting numbers being reported by the public firms after such scandals. And so the public also lost trust in the auditors who were supposed to verify the numbers. If you remember Arthur Andersen, so before these scandals, we had, right now we have the big four accounting firms. We had the big five, and Arthur Andersen was the fifth, was one of the five. Now, after the collapse, Arthur Andersen actually went under, and so now we're left with the big four. And so in response to these scandals, the Democratic-controlled Senate and the Republican-led House of the time did something that we haven't seen recently. They actually worked together. They worked together to overhaul corporate governance. They overhauled financial reporting and the accounting practices. And they did this by issuing the Sarbanes-Oxley Act, or also known as SOX. So among other things, the Sarbanes-Oxley Act set up a new body called the Public Accounting Oversight Board that was meant to supervise auditors. So before SOX, the audit industry was largely self-policed. We had the public firms crunching the numbers, compiling the financial reports, and before making them available to the investment public, the external auditor used to come in, used to look over the numbers, sign off of them. So largely, it was mostly self-policing. There was no true oversight. Certainly, there was. Of course, there was always the risk of litigation. So if the auditor was really remiss in the duties and failed to do their job, there was always the risk that investors could sue the auditor. But clearly, that wasn't enough to prevent all those scandals in the early 2000s from happening. And so after SOX, the Sarbanes-Oxley Act, what a major thing that it did was it helped to remind auditors that their duty under the law was to serve first and foremost the interests of investors, not the management of the company, but the investors, the outsiders. And so there, the focus was shifted a little bit by this oversight, and the board's mandate was quite simple, really. In their own words, the mandate of the board is to protect the interests of investors and further the public interest in the preparation of informative, accurate, and independent audit reports. So just to give you an oversight of what was happening pre-SOX, of course, the SEC regulates public markets. So we have the public companies trying to raise funds through the public markets. We have investors, and so periodically, as per SEC guidelines and rules, the public companies must issue the financial reports, which investors could use for making their investment decisions. And so we had the external auditors come in to audit the financial reports, verify the numbers, make sure everything is legit. And after SOX, we also now have the PCAOB that is monitoring the external auditors. So in summary, the PCAOB is a, quasi-governmental organization that oversees the auditors who audit the publicly traded companies. And the PCAOB is also overseen by the Securities and Exchange Commission to a degree, but it also has a good amount of its own independence. And its main goal is to promote and improve audit quality on the audits of these publicly traded companies. And the way that it does this is by overseeing the auditors. So for example, it would inspect many audits each year, and it also issues the audit standards that auditors must follow when they audit the public companies. So the PCAOB is clearly concerned about the quality of the audit services provided by the external auditors. Now, the funny thing about auditing service, or really the tricky thing about it, is it's not something that's tangible. It's a credence good. And so one question that bothers many is, how do we measure quality? How do you measure audit quality? And this is something that the PCAOB has been grappling with as well. And then in a concept released a couple of years ago, the PCAOB proposed a number of potential audit quality indicators, a group of audit quality indicators. Now, the idea behind these indicators is for anyone to be able to use these quantitative measures to help evaluate the quality of the audit, because again, it's this intangible good that is hard to measure. And also, the purpose of the indicators would be to help us figure out how we can achieve higher audit quality. So, the audit quality indicators are grouped in three major categories. We have the inputs that go into the audit, we have the audit process itself, as well as the outputs. Now, when it comes to the outputs, it's quite easy to measure because, well, we see the financial statements, we see whether or not the firm reports weak internal controls, or whether the firm gets a going concern opinion from the auditors. But when it comes to something like the inputs, this is when things become tricky. So inputs are very important, right? So the indicators related to the inputs, these are the indicators that are related to human capital at the accounting firm. Now, specifically, we're talking about the employees, right? The audit professionals are the employees conducting the audits. And so clearly talent is a very important input that's required to achieve quality audits. But there's not much data on the inputs. Now, to drive home the importance of talent, so once SOX was adopted, talent actually became much more difficult to obtain. Finding quality talent became even more difficult. Why? Well, first of all, good employees are just difficult to come by in general in the accounting industry, because you can't just hire anyone. You always want to find someone with either an accounting degree, accounting experience, or someone who received a solid accounting education. And it's almost like the accounting industry was hit with this double whammy after SOX. As regulation was increasing, so did the need for audit services and accounting employees who could help with compliance. And so not only are accounting firms now competing with each other for talent, they're also competing with the publicly traded firms that they typically audit. And these publicly firms need more and more accounting talent as well to help them comply with all the new regulation that's coming out. Not only that, but looking over the past 20 years at accounting firms, the phrase that comes to mind is the more things change, the more they stay the same. Why? Well, because the industry still faces the same issues it faced 2 decades ago. The main issues that I'm talking about are recruiting and retaining talent. Now, time and time again, recruiting and retaining talent has been at the top of the list of concerns that accounting firms have faced for some time. And in fact, they're still facing them today for the most part. So we know that employees are important assets of the firm. And so if we were to look at audit quality, we need to look at human capital. Employee well-being could be a major factor in accounting firms' ability to recruit and retain employees. And it can also be a good indicator of audit quality, as the PCAOB have proposed in their concept release. So employee well-being seems like an important piece of the puzzle for figuring out what accounting firm characteristics are driving audit quality. But the issue is that, well, we know very little about accounting firm characteristics, especially about the well-being of employees, or what the employees in the accounting firm are thinking about the employers, or are they happy? What kind of conditions, what kind of working conditions do they face? And in some respects, the accounting firm is somewhat of a black box to outsiders, especially researchers like myself. Why? Well, accounting firms are private firms, so they are not required to disclose any information regarding human capital, and they're actually quite reluctant to share their information, to share the employee data with outsiders due to, well, there are always confidentiality concerns. There may be potential legal liability issues. And so most of prior research that looks at accounting firm characteristics has done so by looking at the clients. When I look at the research that's being conducted, a lot of the research is being conducted about accounting firm characteristics. The phrase that comes to mind is, show me who your friends are, or show me who you go with, and I'll tell you who you are. And the reason for this is because most of what we know based on the research out there today is derived from the clients of the audit firm, not the audit firm itself. So for example, we know whether the audit firm is a specialist in a certain area by looking at, what sort of clients they have. If they have a lot of clients from a specific industry, they must be a specialist in this industry, right? We know whether or not they're influential, their regional influence, or how much of a market share they have, how much of an influence they have, how risk averse the firm is, right? We could look at how risky the clients are to figure out, the aversion or maybe how comfortable the audit firm is with risk. But we know very little about what goes on in the audit firm itself, the actual audit firm characteristics based on the employees. And so in our study, we took a different approach. We actually looked inside the audit firm by looking at what the employees are saying. Now, to be fair, the larger accounting firms do voluntarily disclose some basic data about the makeup of their employees in their annual reports. So for example, very recently, some firms started disclosing metrics related to DEI, the diversity, equity, and inclusion, which mostly included breakdowns of workforce composition. They also provided some statistics on what employees are saying and on what, how much they feel that they belong at the firm, how comfortable they are working at the firm, and also why employees join the firm to begin with. So a few firms are disclosing a bit more about their workforce now, but it's still hard to get a full picture of the profession from the data that is made available by the accounting firms. And so to peek inside the accounting firm, we obtained data from Glassdoor.com for well over 100 top accounting firms. And the data we obtained contains various rating measures that employees use to rate their employers. And we use these ratings to answer our questions. So just to give you a sense for the sample, the sample for the ratings that we've obtained spans from 2008 until 2016. And, not surprisingly, the vast majority of the sample is made up of the Big Four firms. They make up the bulk of the observation that we use in the study. So the first question we ask is, well, how do the rank and file employees rate their employer? And to answer this question, we use the Glassdoor reviews that contain various ratings. So what do these Glassdoor reviews look like? Okay, so here's a typical rating commonly seen for a Big Four accounting firm. Now, COVID may have changed much about the working environment for accounting firms, but this rating was provided back in 2019. This is long before COVID, what seems like long before COVID now. So we know this is not just capturing the effects of COVID. It would be interesting, though, to see how things changed for accounting employees, if at all, after COVID, with everyone moving online, and some of the Big Four, or one of the Big Four, basically allowed the employees to work from home indefinitely. And there's a lot of talk about working from home or mobile, the mobile workforce. So again, here, just to give you an idea of, a typical rating, the heading is not too reassuring, right? There's clearly some issues with work-life balance, according to this employee. Despite the work-life balance being an issue, it seems like the firm still gets a 4 out of 5 stars overall rating. The employee recommends the employer to others, approves of the CEO. Clearly there are some pros. Work-life balance seems to be a con. And so if we look further into the individual ratings, the additional ratings, we see that career opportunities is rated quite high, whereas the work-life balance is a little bit problematic, is low, is on the lower end. Now, if we were to compare a typical Big Four to a non-Big Four accounting firm, and again, this is as of 2019, pre-COVID, we'd see something like this, right? So as you can see here, Ernst & Young and Carl Harworth, they have the same overall rating, 3.8. This is based on older reviews as of 2019, and the clear difference here is work-life balance, right? So Ernst & Young has a lower work-life balance than Harworth in this case, although it does have a higher recommendation rate. So more employees would recommend working for the Big Four here. Now, looking at the entire sample, what we see is that throughout the sample period we examine, the Big Four have this premium when it comes to recommendations. More people are more likely to recommend working at the Big Four than at the non-Big Four. And we see something very similar when it comes to the overall rating. There's a clear Big Four premium happening here. Interestingly enough, we see this. There's a dip during the recession years, but then the firms recover quite nicely as employees are becoming happier and happier over time. Now, looking at the individual ratings of what employees are saying and comparing Big Four to non-Big Four side by side on all the ratings, so we see that the Big Four clearly have this premium over the non-Big Four, and their greatest advantage is when it comes to career opportunities. So employees at Big Four rate career opportunities higher than they do at the non-Big Four. However, the greatest disadvantage that the Big Four have when it comes to these ratings is when it comes to work-life balance. So clearly, employees at the Big Four, although they are enjoying more career opportunities, they are paying for it by having to put in more hours. Now, focusing specifically on the Big Four firms, because they are making up the bulk of our sample and provide much of the audit services in the US. We also look at audit employees versus all other employees. Remember, the accounting firms, they have the audit service line, but they also have employees providing tax services as well as consulting services. And so when we look at auditors and compare them to everyone else within the Big Four, we see again the differences for career opportunities and work-life balance become even more pronounced. We see that when it comes to career opportunities, auditors rate their firm the highest, and they appear to be the most overworked, right? They appear to have not much of a life when it comes to putting in the hours at the Big Four. And again, throughout the sample period, looking at the trends from all the way back to 2008, we see that there's this steady decline in work-life balance, and the Big Four are clearly lagging behind for most of the sample period. So one takeaway here is that although auditors appreciate the career opportunities most, they do not seem to be they seem to be the most overworked employees within the industry. And so now, having seen what's happening within the audit firms, what employees are saying, and how they rate their employers, we can now talk a little bit about the second question, which is, well, what drives employee satisfaction within the accounting firms? And to answer this question, we conducted a regression analysis to examine how the various work characteristics as captured by the 5-star ratings explain the overall job satisfaction, the overall rating. And here specifically, we look at how the various ratings explain overall satisfaction. So first of all, we have the all employees in blue, and we also conduct the analysis for audit employees only, which are in orange. So somewhat surprisingly, career opportunities and culture and values are seen to be more important to employees than work-life balance and compensation are. Now, compensation and work-life balance do play a role in contributing to overall satisfaction, but clearly they explain a lot less of it than career opportunities and culture and values does. If you compare the magnitudes, it's almost like they're almost half as important as these metrics. And this is something that's important. It does have implications for us going forward, for the industry going forward. One takeaway is that firm culture is likely to increase in importance with this approachable generational shift that we're seeing as more senior positions are being taken over by millennials within the accounting firms, and as there are more and more entry levels are being filled with Generation Z employees. who are considered to be more idealistic and maybe more reliant on at-work coaching. And so given the accounting firm's heavy reliance on recruiting recent graduates, the accounting profession may experience this generational shift sooner than many of the other professions, and the accounting profession may serve as a bellwether for other professions in terms of what will be happening as this generational shift occurs. And so leading up to the third question, having conducted this analysis, we can now talk a little bit about our final question, which is, well, how are employee satisfaction and work-life balance related to audit quality? Is there a link? Do they help explain audit quality? And to answer this question, we constructed satisfaction and work-life balance scores specifically for audit employees at the accounting firms, and merged these metrics with financial data for the public firms, for the clients of the audit firms that were audited. And we then conducted multiple regression analysis to examine the link between audit employee working conditions and the quality of audit services that they provided to clients. Now, the study examined 3 audit quality proxies. So we looked at accruals. That's the firm's use of accruals to potentially inflate earnings. These are within GAAP manipulation, so this is legal, but it's sometimes pushing the envelope, but it's still legal manipulation of accruals. We also looked at the probability that financial statements are restated in the future, and we also looked at the likelihood that a financially distressed client received a going concern opinion from the audit firm. So to summarize, we do find a direct link between work-life balance and audit quality. So to place the findings into context, a 1 standard deviation decline in the work-life balance score is associated with a 13% increase in the probability that the client would restate their financial statements, which is a significant finding. Now, interestingly enough, we don't find a link between satisfaction and audit quality. So just to summarize the results quickly, so when it comes to employee satisfaction, the Big Four clearly have this brand effect, and they do command a higher rating. They have this rating premium when it comes to satisfaction. And we also see that career opportunities are much more important in making sure that employees are happy than work-life balance or compensation are, which is a little bit surprising. And now this is especially true, this finding especially holds for the audit employees within the Big Four accounting firms. So as auditors trade off career opportunities for work-life balance, this supports some of the prior findings of previous research that young accounting firm employees tolerate highly demanding work schedules at the beginning of their careers to gain public accounting experience. And this was shown in Hermanson et al. Study back in 2016. And then looking at the audit quality, so we do find there's a direct link between work-life balance and audit quality. So the higher the work-life balance, the more likely that you'll see higher audit quality. However, there is no strong link between employee satisfaction and audit quality, surprisingly enough. So one takeaway here is that if you're looking for an auditor for your firm, you may want to pay close attention to how they're treating their employees. Are the employees overworked? If you were to go on Glassdoor and look at the work-life balance before hiring a firm, it may tell you maybe a pretty good sign of the kind of service quality you're likely to get. So what are the implications of these findings? Well, so when it comes to large accounting firms, one thing is for certain: accounting firms invest heavily into their workforce, right? So, we saw KPMG are, willing to spend $5 billion on training and technology. Ernst & Young is expected to spend something like almost $2 billion through 2021. PwC is investing heavily into technology training, as well as various technologies that would help improve audit quality. So the accounting firms are clearly investing a lot into, making sure that they're able to attract talent by providing this top technology, the best training out there. And so there seems to be this trade-off between work-life balance and career opportunities, right? The new hires, they have a strong desire to obtain the necessary experience and receive top training. And this sort of allows the accounting firms to demand longer hours from the employees. So while career opportunities can attract new employees, the high turnover at the accounting firm suggests that firms may still need to work on improving work-life balance to retain those employees. Now, the low work-life balance in accounting firms suggests that firms were not too worried about overworking their employees, right? It's as if there's this unspoken understanding that was reached. Firms keep employees happy by providing plenty of growth opportunities, plenty of training, and employees keep the firms happy by working extra hard and putting in long hours. However, this may be changing in our current post-COVID world. So recent evidence suggests that talent experience and employee well-being have risen to the top of the agenda for both short and long-term planning and accounting firms. So for example, according to Lara Abrash, who is the chair and CEO of Deloitte, employee well-being is becoming increasingly important. And given the great resignation we're experiencing now, it's even more difficult to find and retain good talent during these times. So firms will need to be a little bit more attuned to the needs of the employees going forward and be ready to retool their culture, which may require a greater focus on improving the work-life balance for employees. So this pretty much concludes what I had for you today. Please let me know if you have any questions. If you also want to reach out to me in the future, I'm leaving my email here during the Q&A session. So please feel free to reach out to me. If you have any questions regarding the research, or if you don't have any questions now, if you'll get a question in the future, or you have some idea, or perhaps you want to, perhaps your firm is interested in conducting some research on employee satisfaction and performance or various metrics, I'm always happy to talk to anyone. And yeah, I'm gonna give it over to Christy now.
Excellent, Josh. Thank you so much. This has been fantastic. And I'm such a data person, so I was very interested in a lot of the graphs and charts and just information you were sharing. So thank you for that. If anyone has questions, please go ahead and submit them at this time. We'll take those questions. I'll give it a few minutes to see if anything comes through, but Josh also has shared his email address like he mentioned. So if you would like to connect with him, if you think of a question, or you would like to connect with him about doing this at your firm as well, his email address is here. So we'll give it another second or so, and if any questions come through, we'll take those now. If not, we'll give you the opportunity to reach out to Josh too in the coming days. And while you're thinking of some questions, I'm just going to take a few minutes as well to thank Josh for his time, for sharing his expertise with us. We are just so grateful. And Josh, I want to say thank you, not only on behalf of the Office of Alumni Engagement, but the UB School of Management as well. We're very thankful for your time with us today. Very appreciative. I also do want to remind you all that this webinar has been recorded. We're going to send you all a link within the next 24 hours. So if you would like to take a few minutes and relook at some parts or watch the whole presentation over again, you're going to receive that recording. So check your inbox tomorrow. That'll be emailed to you. In addition, save the date for next Wednesday, December 1st. We're going to be joined by one of Josh's colleagues, Dr. Nalan Suresh, a UB Distinguished Professor in the Department of Operations Management and Strategy in the UB School of Management. Going to talk about those supply chain issues that we are seeing. So he's going to give us a little bit more insight into that and where it's going. So more information on all of our upcoming webinars, as well as our webinar archive library, can be found on our website. So with that being said, I'm going to turn it back over to Josh for any closing remarks on his side. And if you think of any questions in the next 30 minutes, hour, day, or days, feel free to go ahead and email Josh with those.
Yeah, thank you, Christy. It's always a pleasure. And yeah, I'm just happy to be here. And again, if anyone has any questions whatsoever, do feel free to reach out.
Fantastic. Thank you again, Josh. Thank you for your time. Thank you all for joining us. Take care, stay well. Enjoy the next few weeks. We're going to take a break through the Thanksgiving holiday. But like I said, we'll be back with our Webinar Wednesday series on December 1st. So thank you all. Take care and enjoy the rest of your day.